What's up, guys? It's May 2nd, 2025. So we had a gap up and a broad bull channel. Buy the dip, scalp out, buy the dip, scalp out, buy the dip, scalp out. Three visible legs made up of smaller legs, and those legs got weaker and weaker throughout the day. I want to give a quick shout out to everyone subscribing. I appreciate you guys. We got a ton of new subscribers. We're really close to 6,000 people. That's pretty crazy to think about. So, I appreciate everyone joining, subscribing, and joining the membership. Really excited to get to know everyone. This is the daily chart. This is the 15-minute. This is the 45-minute. This is supposed to be the 15. Now it's the 15-minute chart. Here we can see that the bears had three legs down. Leg one, pull back, leg two, pull back, leg three, pull back, leg four. At the same time, the bears were getting their legs down. The bulls were starting to make rallies higher. So leg one, pull back, leg two, pull back, leg three, and leg three is climactic, putting us into a trading range. That trading range gave the bears three legs down. Leg one, pull back, leg two, pull back, leg three. This created a wedge bottom bull flag. So here's the rally, here's the bull flag, and then it broke out. We have had several bull bars in a row, which we haven't had in a very long time. 1 second here. Okay, so we've had several bull bars in a row. 1, 2, 3, 4, 5, 6, 7, 8, 9 bull bars in a row. We're approaching the swing high. And this is the first bull target. This is the second. Well, the first bull target was this, and that was met. And then it was this, and now it's this, and now it's that. And it's going to keep going for each pullback where the bulls got trapped. So we had a bear trend down. There's trap bulls here. Every bull bar has trap bulls because there's a tick higher here. There's a tail above that, tail above that. Bulls bought this hoping for this type of breakout, and they were trapped. They could either hit out and sell. Well, if they hit out, they are selling. Or they could buy more low and get out around the 50% mark. So there's a lot of things going on. But the next bull target is a better way of saying it. The next bull target's right around here, this high. And that is actually, how far away are we? So we're about 60 points away. We've had a lot of range. I mean, let's see. Delete that. Today's range, not including the gap up. Oh, it's 60 points. Okay, so remember a couple months, like last month, the range was huge. So the range here, 60, 80 points. Okay, let's see what this range is like. Gap down to gap up, 160. Hold on, I just measured these backwards. Let's measure from the 160. Then yesterday's range was 81. And today's range is 60, not including the gap up. So this just looks like three visible legs, and each leg is getting weaker. That's interesting. I didn't catch that at first. Leg one, leg one, shallow pullback. Leg two, pullback, and leg three. And the leg three is getting broader, so the market's slowly transitioning into a trading range. Bulls are going to want another breakout and another rally. Bears obviously want this to be the swing high of this trading range, and they want to sell off. So it'll be interesting to see what happens in the upcoming weeks if bulls can break above or if bears are going to sell off. 15-minute chart, we can see another three legs here. So we're going to count from the bottom here. This is the start of another leg. This is the start of another leg because it breaks the trend line. So we have a rally. We have a gap up breaking above the EMA, so you could restart the leg count. Breakout bar, leg one, trend line break. So leg one, pull back, leg two. We're gonna talk about this chart from this pivot here. So sells off. This gap down is the trend line break right here. You can see it was a rally. First touch of the EMA, rallied. 1, 2, 3, 4, 5, 6, 7, 8 bull bars in a row. Shallow pullback, good enough for its own second leg. Let's measure from right here. And with the gap up from here to here, it was complete. You actually went a little bit past, creating a second leg. There's a pullback right here, so breakout, pullback. I'm counting multiple legs and first legs at the same time. So what I'm counting is a leg one, pull back leg 2, pull back leg 3. This entire thing is a leg. And how is this a leg? Well, look at the daily chart. There's no opposite bars, but no trend line break. So in the higher time frame, this is on one leg. On the lower time frame, we can see this has a tail, this has a tail, so this trend line breaks. So this low right here is right around here. Is this tail? So that's trend line break. You could also reset the count with the breakout. So that's why I'm gonna try and be more. I'm gonna try and talk a little bit more about the details of how I'm counting and not just fly through them from there's 3 ways to count legs. You can count the visible pullback. So a visible pullback is the pullbacks we see on the 15. So we're looking at the 15-minute chart. Here is a visible pullback because we can see the bear bars. A fractal pullback, which we can use the daily chart, this is a fractal pullback that we can't see, but we know it's there because there's tails. So we have to work on viewing the markets through. There's no one way is better than the other. It's just to be cognizant of this. It's just how we can be aware of what's going on in the smaller time frames and tie them in our imagination to the higher time frames. So I'm counting 3 legs up, leg 1, pull back, leg 2, pull back, leg 3 on the 15-minute. On the daily chart, it's just one big leg right here. But on the smaller time frame, it's leg 1, pull back, leg 2, pull back, leg 3. So let me know in the comments if that makes sense, and let's do this breakdown. It's Friday, so I don't want to take up too much time. Big gap up, bar 1 is follow through, so that's good for the bulls. It's not the best follow through. We can see tails on both sides, so it's a trading range bar. Bar 2 has more tail than bull body, closes bullish, but again it has a tail, so it sold off and rallied. 2-sided trading on a smaller time frame. Just show you guys real quick why I'm saying it's 2-sided trading on a smaller time frame. There it is, right? Isn't the definition for a trading range big down, big up? Well, that's how you read the tails. It had a sell-off and rally. Close bullish. Bar 3 is the first bear bar after a gap up and 2 bull bars. Again, it is still a trading range, so the high of the trading range could be right around here. And then we see a strong trend bar, bar 4, creating a bear gap. So now we've had a gap up and a leg down by the bears, so that's trading range behavior. Bar 5, more tail than body, so again trading range behavior, sells off and rallies, 2-sided trading. Looks like the bears do want a reversal. They're trying to get the reversal, but the momentum is to the bull side. We're above the higher time frame EMA, so keep that in mind that bear setups will fail a little more often because we're in a bull regime. We're in a bull regime. Bar 6 is an inside bar. Inside bars are the only type of bars not breaking out. Bar 7, rally, sells off. Again, same situation how bars 3 and 5 had a sell-off and a rally. Bar 7 has a rally and a sell-off. So it's giving us trading range behavior. See, rally and sells off. So although we are rallying with the gap up and the momentum, there is still a sideways. Where's the so again, the rally and sell-off, 2-sided trading. But this sell-off is kind of weak and ends up being a pullback like we saw with bar. This sell-off, it didn't go all the way down. It just ended up being a pullback. Bulls have momentum. Bar 8, bull bar closing outside with a small tail. So the behavior of a trading range is slowly changing. But if you're going to buy the high of bar 8, just be wary that you're buying the high of these swings right here. It could just collapse. Bar 9, follow through. And look, again, there's a pullback on bar 9. So the market sold off and then rallied. Bulls were buying the pullback. And then bar 10 rallied and sold off. So bulls were not willing to buy the high. They were more inclined to buy pullbacks. And we see that with 9 and 11. Another tail, sells off and rallies. And then a big bull bar 12. Now we have the nicest looking bull bar after several bull bars. Remember, trend line break here. So that's another leg on a smaller time frame. You could say leg 1, pull back leg 2, and then pull back leg 3. Big gap up, so the expectations is a tradable leg within the first hour. Here's that tradable leg within the first hour, then we're going to go sideways for the majority of the day. And we did go sideways. We had a new high, sold off, new high, sold off. It was every time the bulls made a new high, they were taking profits. Broad bull channel, bears were able to make money. It was definitely harder to be a bear, but you were able to. There was a bear channel here, 3 legs down by the bears there. So 13, double top right around here. The high of 12 is 375. The high of 13 is 350. So this is actually a lower high. I was just reading these numbers up here. And sells off, rallies, trading range behavior again. Except now we're in the third leg, so this gives more, there's more weight for a reversal than a continuation. We rallied for 1 hour, bar 12, and then we went sideways till 24. So about 1 hour of barely a trend, or I don't want to say trend because there's no bull gaps, right? There's a small gap right there. No gap. There's a gap right there, actually. Let me draw it in. So, and the reason I'm looking for gaps is because we usually want to see 2 gaps at the open for trending behavior. And trends they're rare, 5% of the time. It happens once a month. But there are 2 gaps here. The problem with this is there's also a bear gap, and gaps get closed in trading range days. So, bears sell off, rally, sells off again 13, rally, sells off again 15. 3 legs down, and then bulls go for 3 legs higher. I'm counting like 1, pull back, like 2, pull back, like 3. That's a wedge bottom. Look at 15 look at 16 and 17's tail. It's kind of testing that breakout point. The breakout point got tested multiple times, so we know bulls are not that eager to keep going. Bears actually get 3 legs down. So there's 3 fractal legs down from a fractal perspective. Leg 1, pull back, leg 2, pull back, leg 3. Then from a visible perspective, leg 1, pull back, leg 2, pull back, leg 3. Nested wedge bottom, another fractal 3 legs down, leg 1, pull back, leg 2, pull back, leg 3. Again, now that the bulls bears went from testing the high of bar 8 to going right around the midpoint, the low of 9. So bulls are not eager to buy high. They're more interested in buying the average price around bar 24, first touch of the EMA. Anyway, so we get a rally up here, leg 1, deep pullback, leg 2, like pull back, leg 3. Wedge top, bears see this testing the high here, and they get short 19, 20. Leg 1, pull back, leg 2, that's a fractal leg down. Where are we in the market cycle? Again, we got a gap up. Bar 3 is an opposite bar, so now we're channeling. The channel starts right here, and then we have 3 legs higher, so the end of the market cycle is trading range behavior. And we go sideways again for an hour. 21, good bull bar closing out high. Bulls bought that, but they scalped out or they got out break even because look at the bar in 22. There's no body, so they weren't willing to hold. They bought it and it sold off. Bears were trying to short the swing and get the market to reverse all the way down and close the gap. 22, bear bar closing out slow, and 24 is good follow through. If you're looking to short 24, you're shorting into support, which is the EMA, and you're shorting 3 legs down. Leg 1, pull back, leg 2, pull back, leg 3. So be cautious of that. First touch of the EMA is the first time bulls get to buy the average price after a gap up and the market's been trending over 20 bars. And they buy that with bar, and we can see that with 25. Sells off 1 tick below and then rallies, trapping bears. This is the good dynamic for a second leg. There's 3 types of traders that look for a second leg. There's the bulls that are going to buy here and they want to press their position. There's the bears that are going to short here, or maybe short a little bit higher. Nonetheless, they short here because it goes 1 tick below. And so they're trapped into a bad trade. They buy back shorts. First type of bulls are buying, they're pressing their position, so they're buying long. Second traders are bears buying back shorts. Third type of traders are us, the traders who have seen the move, seen the pullback, and now we're looking to get that high probability second trade. 25 becomes a good bar. It's a reversal bar, and I will be dropping chapters, I think it's 5 or 6 in the trends book for Al Brooks, and it's about reversal bars. So I might add this example in today. Reversal bars are one of the higher reliable setups, as long as I don't predominantly just trade reversal bars, but reversal bars are part of the setup I like to trade daily. For me, I would not get filled on this bar because I traded them with limit orders, but if you were to buy this bar, it would work for 2 to 3 legs up. So this bar is reversing, trapping bears, and there's 2 types of reversal bars. There's counter trend reversal bars and with trend reversal bars. With trend reversal bars are the better bar to buy, in my opinion, because with trend trades are always easier, and we can see that here it works great with bar 25. So rally sells off right here, small tail. Bulls are now buying pullbacks again with 26. Bad ball to 27. 27 could be a pause bar, could be a pullback. It is a pullback on a smaller time frame. Then we see 28, bull bar closing on high, immediate pullback bar. 29, first reversal. We have 4 bars in a row. First reversal can get bought, and then look at that, bar 30, 31, climactic price action. Big gap between 30 and 31, 31, 32, 33, or 30, 31, 32. And I think this is an exhaustion gap because we have 3 legs up now before that part of the chart gets put in. So something like this. We have a leg 1, pull back leg 2, pull back leg 3. 31 is a nice looking bull bar with a big gap. There are some other gaps, but that gap is the biggest out of the rest of the gaps that got put in by the bulls today. So that's a hint that the market could start to go sideways. Then we see bar 32, bad follow through after a really good looking bull bar. So that's suspicious, something that might not be right with this trend or this breakout, because this breakout is breaking out past the swing high. 33 sells off and then rallies. This is becoming a high one in a trading range. Although we don't know it's going to go into a trading range, we do know we're in the third leg, so the probabilities favor trading range behavior. 34, bad follow through. 36, 35, and 36 becomes a bear market channel. I'm going to speed this up a little bit because we're coming on to 20 minutes. So bear market channel, 3 legs down, leg 1, three fractal legs down, leg 1, pull back leg 2, pull back leg 3. 36 is testing the low of 30. 36 is testing the low of 33, and then it rallies, creating a wedge top. So the wedge top is leg 1, pull back leg 2, pull back leg 3, wedge top. And now bears get our market channel down from 39 to 47. There's also 3 legs down in here. I'm gonna give you guys a couple seconds, because people are asking me about trend line breaks, and I want to know if you guys can see the 3 legs down here. We're looking for trend line breaks. We're not looking for bull bars. Okay, so if you guys were looking at this chart and counted the 3 legs down, that's great. The 3 legs down are leg 1, trend line break 43, leg 2, trend line break 47, leg 3. And there's a lot of legs going on here. I'm gonna count all the legs. So that's the trend line break. There's 3 legs down into support, right into the breakout point above 30. This is a trade I would get filled on. I'd have a limit order above 30. I'd get here and probably get out right around here. Trade I would get filled on, and then oh yeah, we're gonna count the legs. I just want you guys to see these legs. So the first one was the trend line break, so we're gonna look at that. Trend line break starts to leg 2. Trend line break starts to leg 3. 1 minute chart, and there you go. So let me make it a little more accurate. There it is. See, first trend line, it breaks leg 2. It breaks right here is that leg 3. Okay, that's one way. Now there's another way. You guys kind of saw it when I went to the 1 minute. Leg 1. Oh, wrong. Leg 1, pull back leg 2, pull back leg 3. Okay. Leg 1. Hold on. Leg 1. Oh. Leg 1. Pull back leg 2, deep pull back leg 3. You guys see that? And there's even a 4th leg right there, but let's just keep it like that for a second. Are you guys starting to catch on how I'm counting these legs? I'm using the tails as a leg for fractal price action, and then when we have a trend line break, that's a leg, or when we have a bull bar, that's a leg. So if it's confusing, it'll make more sense if you just try and draw it out yourself. There we go. So there's a lot of things going on here. You know, there's a bear channel here that gets a bearish breakout into a smaller trading range, and then we go sideways and break out to the bull side on the lower time frame. So you guys see that leg, and then we're going to rally again for multiple legs. Here's a good visible leg, right? So leg 1, pull back 53, leg 2, pull back 54, leg 3, this bar's here, and then we go sideways for 2 more legs up. Leg 1, pull back, leg 2, leg 1, pull back, leg 2, pull back, leg 3, pull back, leg 4. 4 legs, and we see that with the opposite bars. And then again, if I scroll down to a smaller time frame, you guys would see all these tails are actual legs. So 51 to the high of 52 is a leg. 53 to the high of 55 is a leg. The low of 59 to the high of 62 is a leg. This is fractal price action again, and then there's fractal price action, visible price action. I try and read both because you can't really ignore anything. It's the more you focus on it, it'll just become second nature or over. I've been doing these videos for the better half of 2 years now. So I'm doing this as a way to get my subconscious to just understand, like, 3 legs down here. There's also 3 legs up here I didn't talk about. Leg 1, pull back leg 2, pull back leg 3. Well, that's a wedge top within a wedge top within a wedge top. So look, here's the wedge top, leg 1. You could even argue leg 1, pull back leg 2, pull back leg 3, because this didn't make a new high. So let's do it like that. Leg 1, pull back leg 2, pull back leg 3, wedge top. Leg 1, pull back leg 2, pull back leg 3, wedge top. Leg 1, pull back leg 2, pull back leg 3, wedge top. So this is a good example of fractal price action, and it can't be ignored. So you understand what the lower time frames are doing. You can tie it together with the higher time frames. It may seem overwhelming at first, and that's because it is. It's a lot to take in, you know. You just have to stay the course. There is no real shortcuts in trading. If you take a shortcut, you're just gonna hinder yourself in the long run. It's best to just do the work and take the long way is the short way, and it'll be very rewarding in a few years. So we have another wedge top here, and then again wedge top here and a wedge top here. Lots of wedge tops, which means bulls tried 3 times. 63, really bad follow through. 64, big bear bar closing out slow. But then 65, bad follow through. It's a bear bar. We have a gap. Excuse me, it's a bull bar. We have a gap, not the strongest gap, but they do get a leg 2, leg 1, pull back, leg 2. Starts to rally. Now the market's going sideways in trading range price action. The market tends to vacuum. And that's how traders get trapped, is because this looks like a breakout bar, and it is a breakout bar, but it's a breakout bar in a trading range, which means it's more of a vacuum. Here, this looks like a breakout bar, but it's a breakout bar in a trading range, testing the breakout point for the bears. It sells off for another leg 2 right down there. Something that could be confusing is I just said leg 1, pull back leg 2, and then I say it sells off for another leg 2. Well, at this point in time, this is all the information we have. So it did make its leg 2. It actually had 3 legs down. Leg 1, pull back leg 2, pull back leg 3, and then maybe it rallies. We have to look at the smaller time frame. Then the market unfolds, and we start to see that here is the bull, leg 1, pull back leg 2. This doesn't make a new high. It's a higher low, and it sells off. So this is why trading ranges are confusing, because the moves are happening fast. They're creating gaps, which is a sign of a trend. But if the gaps are also closing, that's a sign of trading range, which is why it's really important to understand gaps. Which, speaking on that, I will be dropping a members video for gaps, the introduction to gaps and why they're important this weekend. I'm gonna tie this. Let's finish this up quickly. I'm spilling over your guys' 20 minutes. So I'm gonna do the measured moves. You guys had a good trading week. You know, mine was pretty good. Didn't get to trade a lot because PG&E was doing work outside my house for some pull. They're actually doing work on the whole. I didn't know they were doing work on the whole block. They're just breaking it off into segments. So I think my sheet was one of the first ones. So I can definitely get back at it next week. It's gonna be pretty fun because the market seems to go more sideways, and my system works better on sideways price action. So bulls don't get their 1-to-1 of the breakout. It's a lot of range. Here, this leg from bar 5 to high bar 12, it's met right here with the low of 23 to high of 31. This bear leg down was met with the high here. The pullback on 22 is met there. Then we have another leg here. That's a little sloppy. Okay, put it to the low of 29. 1-to-1's met. This bear leg strong to get second leg down, but it got a deeper pullback. Bar 63 went past the breakout point, so it's not a strong leg. And then this leg here, at first we're going to measure it from here. Okay, that wasn't met. And then we realize, oh, it's a deep pullback. And then that was met with 76. All right, guys, hope you have a good one. Hope you had a good weekend. We pushed into 25 minutes-ish. Thank you for all the followers. Thank you for all the support. If you learned something, share the show. Don't be a hoe. I will talk to you guys this weekend. I'm going to be dropping a trends video and a members video. Thank you for your time. Have a good one, everyone. Bye.